Sometimes the titles to our show are straightforward, simple, and easy to understand. Like Friday, Freaky Friday. How the heck did I come up with that? Before the market even opened. Today, it's putting lipstick on a pig. What does that mean? Has a different meaning to me, Christian. He's not so sure about it. We'll discuss that. We'll talk about the end of Q1, the beginning of Q2. Little surprise earning in the retail sector. Who better to have on to start the quarter than Craig Johnson, technical director over there at Piper Sandler? We're moving around today. It's the first day. It's also April Fool's Day, but I promise no April Fools out of pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, let's take a look at the commodities and futures. S&Ps all over the map, up and down and all around. End result, we're down 26 handles, 56.2750. The buck still consolidating, trying to get over that 104 level, but can't. Up about 9 cents. TLT up 48 cents, 91.51. Trying to clear that 92.20 area. USO continues that strength from yesterday a little bit, up 12 cents to 77.45. GLD continuing to grind higher, flat 288.14. Silver the laggard. How many times you hear me say that? Down 23 cents. Bitcoin futures, they're up $1,555 at $84,265. Let's bring in Christian Fromhertz. Christian, how you doing today?
There we go. Hey, good
Yeah.
morning.
Before we get started, before we get never. Before we get started, I mean, Triple D, he misses all you guys. Even some of you guys that give him a hard time. He said there would have been no imbalances yesterday if he would have been trading, because he would have taken every side of those buy imbalances, those huge buy imbalances. Let's just start out with that, because Christian, you pointed this out. Man, oh man, oh man, did they had a thirst for buying at the close.
Yeah, I mean, I think the whole day was interesting yesterday. I mean, especially we opened up lower. We've seen this before where we open up lower and there's just lack of interest, and we kind of just continue to go down yesterday. But that was a little bit of that buy the dip mentality yesterday. A pretty nice day. We know that these quarter ends, month ends are particularly tricky. There was a chart out from Zero Hedge yesterday talking about a lot of pension buying. Again, they do these things just as long as I've been trading. They always like to do the MOC. They're tied to the close, so whatever order they have, they will put this down essentially for the close, or they need the close. A lot of the brokers that are executing for these pensions or larger funds will basically trade into the close a little bit. But there you go. They said that it was the highest on record in terms of end of month, end of quarter pension rebalancing going on. So there's your window dressing for you there, Joel.
I mean, Christian, you've sat on some trading desks and stuff, in the past. I mean, do they not know they need to buy until like they run the final numbers that late in the day, or do they know earlier in the day? Because if you needed to know that you needed to buy like that, holy mackerel, you take out the low of the move early in the morning. I mean, there was some definitely steep discounts to that closing price. How does that work?
So I was on a Delta One trading desk for a number of years back at my Merrill Lynch days. I also did some portfolio trading as well. and they usually know ahead of time, like what the order is going to be, and there is some pre-positioning, and I think that's why you kind of saw that move in the afternoon as well, which was a pretty strong move. So there is some pre-positioning for that, especially when you get closer to right closer to the end of the day, and then it's the traders who manage that in terms of how much of the order they're going to put actually on the close versus actually like trade into. So I did that for a number of years and executed for a number of the leveraged ETF guys too, who are doing that end of day trading. So you could really get some wild days when you've got the month end and the quarter end, and some other events like quad witching. So yeah, and this one was, as to Zero Hedge said, a pretty large one just at that.
So is this the beginning of things to come for Q2? I had to explain my title, putting lipstick on a pig, which is kind of like, was this just another one of these 140-point rallies intraday that mean absolutely nothing? Or do you think there's a little bit more? We're gonna get through April Fool's Day. We're gonna get through Tariff tomorrow, and it just we turned a quarter. I mean, I don't want to call the double bottom. The S&P's pierced that low by quite a bit, back above it. The triple Qs, that doesn't. I mean, that breached it by a wider mark. What are you going to use? Are you going to use the next couple days, the next week or so here? Can we build a base? Because I will say I hated that rally after expiration. I would
Yeah.
love for see us stay down here, have a just a consolidation for a couple days, and then bolt out of here and build a base. But man, there's just too many unknowns out there with Tariff Wednesday tomorrow. What are you using for
Yeah, I
indications?
mean this is going to be a big week. I think you kind of have to move a little bit slower this week in terms of like, what you're positioning other than day trading. I mean, this has been a very good market to day trade. In terms of overall positioning, I think it's going to be it's going to be an interesting week with I've never seen before in all my years of trading. I've never seen a tariff day. I think it's called Liberation Day tomorrow. So I don't really know what to expect from that.
No.
I think that there's somewhat that this is priced in. I mean, how many times have we talked about tariffs? I think let's get this over with. Like whatever the administration wants to do in terms of tariffs, let's get it over with. And it might be it might be, usually it's buy the rumor, sell the news. It might be the other way around, because we've been literally hearing about this day for like the last 2 weeks. So if it's not as bad, because it's widely expected that there's going to be a lot of tariffs that are put to place, it could be an actual buy the news type event. But and April is one of the strongest seasonal months of the year, so I think that's something that I have to keep in mind. But to your point about the possible double bottom, Qs, I always will look at what held up a little bit better. And as we progressed through the day yesterday, I was astounded at the strength in the diamonds. So DIA yesterday, I think that went green like midday, or I think around like 11 o'clock yesterday. The diamonds were not down much yesterday, as much as like the Qs were, and IWM, and they went green pretty early. And like, to me, when you look at the stocks that are in the Dow, there's only 30 stocks and it's price weighted, but it's more of your industrials, it's more your energy stocks, a couple big banks. And to me, it seems like that's what the market likes right now. Now, I don't know if that's going to change this week, but I think for now, like, those stocks in the Dow are telling me something, that's where folks want to be, rather than in high growth stocks. But anything could happen in a strong seasonal month.
Yeah, hadn't looked at the diamonds chart in a while. Excellent relative strength there. Didn't come anywhere close to making a low of the move by far. And in balance, we were looking, early in the session, we were looking at like Walmart. Walmart was ripping. We were looking at like the XLP that was ripping, XLU that was green. Look at Philip Morris, smoke them if you got them, new all time high. Berkshire to just, I mean, you want to talk about the value of value trades coming down to the 520 area and just blasting. So uh,
And
that's the leadership. And, meanwhile, Microsoft still had a bad day. Nvidia, I mean, they were still red at the end of the day. So the market's clearly stating that, the safety trade is still on until
and and
other
the moving
notified.
sorry to interrupt. And then the move in bonds too this morning is kind of telling you that. I see 30-year bond futures or TLT is indicated up about 1% again this morning. And that actually takes out the highs from, yeah, definitely the highs from last week, not the highs from 2 weeks ago, but you got a nice move in bonds this morning.
All right, let's move on here. I know because of the volatility in the market that you've just been trading these IPOs quite a bit, Christian, and Newsmax. We talk about the open, right? That thing opened at $14, never ticked 13.99, traded up to 83.51. Pre-market high comes in at 125 even. I can reserve my comments to say or make exact comments that I don't know what the hell to expect from this stock.
Wow, 125. My goodness, it seems like retail has a new toy to play with here with with the stock. It's a low float too. I think the let's see if we get the outstanding shares. And when you have a situation like that, when you've got a new issue and the outstanding shares are small. I think it's only 39 million shares. So I think that's contributing to the volatility is just that there's just not a lot of shares out there, and you can really kind of push this stock around. So it's definitely going to be one to watch today. But all the attention on CoreWeave and Newsmax comes out and steals the thunder.
Yeah, CRWV still settling in here. Let me go back to the 15-minute chart. I don't think it did it see 40 yesterday. No, it didn't even see 40 yesterday. So until otherwise notified, opening price 30 on the first day, close 40. So there you go. That's going to be a big hurdle for CoreWeave. Tomorrow in the afternoon, tomorrow at 1:30, for those of you who are members of the Stock Trader Network, we'll be bringing on Eric Kroll. Eric, an IPO expert's giving us an excellent follow. We'll be talking to Eric about both of these stocks. So if you haven't signed up yet for a free trial, do that tomorrow. Brett can post the code so you can participate in that one. Should we just economics today? All after the open. Anything sticking out to you today, Christian, for economic data?
The ISM data, I think all of this could be potentially interesting. The JOLTS jobs openings, I think people are looking for some clues regarding what the job market is doing. We had there's two Fed speakers yesterday afternoon. I actually like that they had them both on at the same time yesterday. I like when get all the Fed speakers out of the way, but a couple of them were talking about yesterday that they're interested to see what the how the labor market holds up. So Jolt's jobs opening will be interesting to see if there's still that many jobs that are open. Then ISM manufacturing is also out at 10 o'clock, and then you get the services data, which will come out on Thursday. I don't know why they don't put those two together in terms of consecutive days, but you get the ISM manufacturing number. They're looking for 49.5, which is a slight contraction. Remember, anything that's over 50 is expansionary. So it'll be interesting to see how that data comes out and tells us if the economy is doing okay or something other.
And Christine Lagarde is speaking at 8:30. I'm not sure how much of an impact she's going to have on the markets. I think I also saw that some benign inflationary data coming out of Europe as well. So other factors out there to keep an eye on in the markets. Let's go. Yeah, 7 million shares and then that Newsmax. Let's get the bad news out of the way. And if you're a shareholder of Johnson and Johnson, the never-ending saga of the talc powder case takes another turn for the worst. I don't know what they're trying to do for the settlement, but back to court here. Shifts focus back to tort system. I mean, on the talc claims, they're claiming the lawyers are doing this, and the lawyers are claiming Johnson and Johnson did this. A stock that's just with so much uncertainty here. I guess it's one you have to keep it in the back pocket. But coming back down to its 50-day moving average. I mean, it's been range bound since 2021. Johnson and Johnson. Can we get a big pass out of you on that one, Christian?
I mean, I think it's just indicative of how difficult this group is right now. I mean, Johnson and Johnson's been showing some strength, but it seems like there's a lot of pitfalls or landmines in this group. We saw names like a couple names like AbbVie, which was holding up pretty well. Had a big swoosh down. I think that was maybe last week, or
Hmm.
yeah, I think it was last week. It has since recovered, but you just don't know what's going to be in the headlines with these companies. And I that's where I think would be a better place to be is in these big pharma names, but it just seems like a lot of landmines in the group. I thought was what was also interesting yesterday. A group that did not come back yesterday, that was not strong, was Biotech. XBI had a really rough day, and it did have a hammer type bar yesterday in the XBI ETF, but that's new lows for the year, and a big gap down. And I don't know. I'm not very big on like island reversal type patterns, but I mean that's a big whoosh down to take out that range. And I would be interested to see how this group reacts to that type of a move down. Part of that, the issue yesterday was PCVX was down 45% yesterday, so that's certainly didn't help the group. But it seemed like it was a pretty big washout day, and no pension buying, I don't think, in biotech yesterday.
You want to explain that hammer candle?
Yeah, I mean, we see these from time to time where ends up going lower. Where price opens up and then it ends up going much lower during the trading session, and then ends up, coming back nicely. So that was the situation, and with maybe a little bit of buy the dip. Maybe there was something there yesterday from pensions, but still, I mean, that's even with the hammer bar price coming back there towards the end of the day. That's still a nasty move for biotech, and a nasty looking chart too.
Yeah, I mean, basically, it's a reset from all those gains in 24, right? And been in a trading range. Haven't been down in end of the range too much. I'm looking at went out at 81.10. Low of the session right here, 80. So low of the session, 79.33. Your next monthly low, your December low, quite a bit below that, 74.20. So this better catch a bid here in this area. I see it's flat on the session. Better build a base here pretty quickly, or else get a chance to breach it. I think if you want to play this on the conservative side, look at yesterday's high. Even though you had the much lower open, it was still only 15 cents from the high of the session. So if you want to look at this 81.66 area, say, hey, I don't want to get involved until it gets above that. Then just maybe a prudent strategy as well. Let's take a look at the IBB. That candle looks a little bit healthier as far as where it closed in relation to the high of the session, 28.55. But once again, you can look at that as until you get stability. Didn't quite back down to the 2024 lows, but no love there for biotech stocks in yesterday's session, and not really coming back. Um, Should we get Tesla out of the way here early in the session? We were
Let's
asked
do it.
about
Yeah.
that in the STN room. Well, they're trying to ramp up production in China, but that's not going to help delivery numbers tomorrow, correct?
I don't think so. No. So, yeah, the numbers are out tomorrow. Are they for deliveries?
Yeah,
Yeah.
we get yep, we get I mean, what what like if you want to talk about a nothing number, but what are the deliveries are going to be like next quarter? I mean, it's like to me the deliveries should be high because everyone's like, I got to go out and get a car here before the tariffs hit. So, I just a note, for your traders, and was asked about this in the STN room. You got the 4 a.m. pop to 270, just over 270. And you faded hard off that. If you want to gap fill, the top of yesterday's range was 260.56. So already some leakage here in Tesla. We'll see. I mean, I think we know they're going to be bad. Just how much of it is actually priced into the markets?
Yeah, and I think the other thing to watch too, I mean, this is a company with tariff implications because they make all their cars in the US. So, depending on what we hear tomorrow, you might have, if the tariffs are not as bad as expected, you might it's a possible that you might actually see Tesla sell off on that because they should be a hiding place in terms of like if, what we get in terms of auto tariffs and I know I think there was a headline yesterday where some of the manufacturers are asking for some leniency where it comes to auto parts. And so, depending on what we get tomorrow, if the tariffs are worse than expected, maybe Tesla outperforms a bit because of making products here in the U.S. But it could be the other way around too. So I think that it'll be in addition to the delivery numbers, there should be some tariff implications too, depending on what the announcements are tomorrow.
Yeah, do we have an actual time that of these tariff announcements? Is it going to be morning, afternoon? During the while the markets are open, who knows? It's going to be a while. I mean, if they're going to, unless they just issue a press release, and everything will have to scramble through that. Just wanted to check on the automakers here. Um, no lower than move in GM yesterday, showing some relative strength. Buyers still stepping up at the $46 area. Of course, you had the initial whoosh down, but respecting the trading range. Ford recovered off its low for the session, 950. Stellantis, probably the least to talk about of the big three. Relative strength, kind of bad there. That's making a low of the move here in Stellantis. But let's get some of the bad stuff out of the way and
And
go ahead.
I think the chat is saying 3 o'clock tomorrow is 3 o'clock
Thank you,
Eastern.
chat.
Yeah, very great stuff, guys, for
Yep,
pointing
a
that out. three
helpful
o'clock
chat.
tomorrow.
That should be interesting, right? Going into the final hour of the session in the Rose Garden. That should be fun. Um, PVH, Philip Van Heusen. What did he used to have another name besides? Was it something else?
Calvin
Um,
Klein, or no, that's somebody else.
no. Okay. Well, a beat 327 versus 321. A beat on sales 2.73 versus 2.33. Revenue to be flat to increasingly slightly better. A little bit. I mean, to me, that's better. 1240 to 1275 versus 1155. Yeah, so I'd say beat in a raise. This got the initial surge, and then I thought I saw resistance in it at the 73.70 area. It has since punched its way over 76 bucks in the pre-market, 76.14. Um, I'll just give you a pair of highs here, right at that area, right at 76.50, as well as the 50-day moving average. So if you get back up there, actually you haven't been over 76 yet. Not wouldn't be chasing it necessarily, wouldn't be shorting it, but if I was sitting on a long position or took a flyer on anywhere from the 65 to, well, the 74 calls probably are not doing much. You got a chance. You got a nice pop here. Philip Van Heusen going against market trends, a little bit of a good sign for, I guess they're like medium priced consumer. I don't think they're high end. I don't think they're low end. I don't know. I always get thinking I don't know all their brands, but nice pop in PVH.
Yeah, not bad. I mean, I think, a bit defensive too in nature. You need underwear. I don't know. There's a joke in there someplace that I'm going to avoid, so I'll leave it
Okay.
there.
Okay. Oh, I mean, we always enjoy. We got a big mover here. I didn't even know if this one is. Let me just see what I can come up with on this one. Progress Software, after getting absolutely pounded, well, it had a decent day yesterday on the recovery. I don't know if I had them on my earnings schedule here. Boom. Yeah, a beat, a nice beat, 131.06. A beat on revenues as well. Revenue, okay. Stock had a hard sell off here. Christian, I know what you're going to say. You're going to say, I don't follow this one, but I might put it on my radar because it had a good earnings report.
Well, I mean, I think, something positive for the software group, which has had speaking of quarters, the software group, I think, was down around 11% for the first quarter, which is really poor. This is a smaller name. It's funny, these names that will pop on earnings, and it just basically gets back to last week's range. So it is a smaller name. Nice to see a pop in this one, but it's just basically retracing price action back to where it was last week. So tough one.
Okay. PRGS. I think that takes care of it. For earnings, we do have RH tomorrow. So we'll take a look at. I believe that is tomorrow. After the close, RH hasn't been talked about much. Did not make a new low of the move yesterday, so I think you could have a low bar here for Restoration Hardware, way off its all time high. What do you group? I mean, it's on monthly support. I can't say that. Actually, this has been monthly support going back all the way to 2022. I think what's the closest peer for this one? Would you say like a Williams Sonoma, or what do you drop?
Yeah, I usually look for whatever reason, and even though Williams Sonoma is a little bit different, that's the one that I'll look at. I also, for some reason, associate it with Wayfair too, but I don't know if that's the right comparison. But yeah, usually Williams Sonoma, because you forget Williams Sonoma is not just that, but they're also like Pottery Barn and a couple other stores. So yeah, and Williams Sonoma, has been a leader in the group for a long time. Is into some support around 160. That's something that I would pay attention to. But again, just a tough group with consumer discretionary and housing right now. Um, so I would keep Williams Sonoma on the radar, but this is a tough group right now.
Isn't Wayfair kind of the opposite end of Restoration Hardware in WSM?
I think I associate Wayfair with Restoration Hardware because of the way they move. Like there's a decent short interest in these names, so I think that's why I group it. But you're right; it's not. They're different companies, quite different
Yeah,
companies.
yeah. You wanna hear an interesting story about Wayfair?
Go for it.
So I've been trying to convince Lisa to buy a new couch, uh, for years, and been looking around like with this size, this height. Every bubble mice. I went to all these different stores. Even went to my old Lazy Boy and couldn't find anything. So she found this place. It was a little bit of a drive out from us, and we go out there. We're looking around, and we basically see the kind of like almost the exact same couch that we had, but newer and a little bit nicer. We decide to make the purchase. Very nice guy, actually owner of the store, and we started talking, about the markets. And he asked me what I did. I told him I was involved in the financial markets, and he asked me, "You ever heard of this stock Wayfair?" And I'm like, "Yeah, I know Wayfair well." He goes, "I love shorting it," and he said, "I've been in the furniture business for years, and I look at their, and he goes to these different trade shows, and he goes to their inventory, and and I'm like, well, yeah, wow. Well, I hope he wasn't short in the middle of last week, but not too often do you hear from the investing public about shorting stocks, but
Well, there you go, and 17% short interest. So he's contributing to the short interest for the stock. There you go.
yeah, and I remember Dennis had a guy that he was talking to that was involved with this stock, and he was going against his I'm not sure what business what he was in, but he was a high conviction short in this one. So your industry, you know what you're doing, and sometimes it's good to take a position in it. Well, we got a little bit of a rally back, but I see Craig Johnson in the background here, and Craig always brings us excellent information. So with no further ado, let's bring on Craig Johnson. Special treat here, Craig Johnson. You all know him, managing technical director over there at Piper Sandler, CFA CMT. We had some fun with Craig. Was it last week? Was it during the Fed announcement? Yeah. He was on the Stock Trader Network with us, giving us the blow by blow here. And Craig, I like your March Madness theme informed investor letter here. I know you have it up. There's a lot of slides there, so I'm gonna let you control it, and bracket not busted is I like the title.
Yeah, let me just share my screen real quick here.
Okay.
And entire screen should be this one right here. Okay, let's move you guys out of the way over here. Now you guys see my screen?
Yep. And we are going to add it to the stage.
Perfect. So here's kind of the as you break this all down, here are the most important things that I think all investors need to think about. And again, this will be a little bit higher level, and then I'll drill down into specifics. But this market has already been pretty well beat up. And again, there's a lot of people out there across Wall Street that are starting to reduce their year-end price objective. I am not, because I think a lot of the bad news has been already priced into this market. And a couple of the charts that I think that are important to sort of take a look at in here right now is lots of focus on sort of the longer-term trend of the market. It's up. Whether you look at the S&P 500 or even the Russell, the trend is still higher in here. Let me zoom in a little bit further, and let's take a look at something that everybody's been very focused on, which has been these Mag 7 stocks. Well, they're not working right now. And when I go through and I look at whether it's Apple, whether it's Microsoft, whether it's even Amazon, Meta, some of these others, they're not trending. They're not giving you absolute returns. They're not giving you relative returns either at this point in time. Here's the other thing too, Joel, as you look at this, like the sell-off that we had that started in mid-February, found a bottom on the 13th of March. That was the sixth fastest sell-off, down to a 10% decline we have seen post-World War II. And the interesting thing about that for traders out there is when you get that sort of quick sell-off, usually you got a very quick return back to getting to the all-time highs again. And if you just sort of take history as a guide, you could be back at new highs by the end of May, which is just not consistent with anybody's thinking. Everybody just keeps talking about tariffs, concerns, the world's falling apart. There's all these problems out there. I'm not sure that's the case. The reason I say that is when I go through and I look at every stock above a $5 billion market cap and break it up into 3 different buckets, what I would tell you is that, well, a third of all those stocks, they're already off more than 20% from their highs. Sentiment from the AAII numbers are near some of the worst readings we've seen, levels that you typically find during 08, 09 kind of lows. So pain is already out there. Pain is already here. And to say that we're now going to have an environment where there's stocks are going to go materially lower while the financials are moving higher, inconsistent with the great financial crisis. And also there's credit spreads are not widening either. So you're at a point in time where you're at sort of maximum fear because of tariffs and these other pieces. And right now, these stocks are already reflecting it. So the point I've been making to people is it's now is the time to sort of step up and think about wanting to own some of these things. And again, if I go back and I look at the stocks that sold off the hardest from that February 19th high to the March 13th low, what's interesting, Joel, is that literally 40% of those companies are on the weakest stock list to then the best performers coming off of those lows. Leadership of this market has not changed. And if leadership hasn't changed, trend hasn't changed. And again, I come back and I reiterate my year-end objective of 6,600 at this point in time. And if I go through it, I look at it in a factor analysis too, a little deeper of a dive. It was volatility, short interest, and beta that led to the downside. It was the same 3 factors that led to the upside for those names too. So the point being is I'm excited about this market. I know a lot of people are not, but I do not think that we are entering some sort of new environment at this point in time. So a lot of the trends that played out in Trump 1.0 are playing out here in Trump 2.0. And again, they can call things different if they like, but we're getting higher tariffs. And again, you had tariffs in Trump 1.0 too. And at this point in time, I still think you're going to get small caps to work. I still think you get probably 2 rate cuts as you come into the latter half of 2025. And equities, I think, are setting themselves up for a nice move higher. And on a short-term basis, guys, what I would say is from what I put out in our morning notes today, take a look at this particular chart. Again, we saw this big sell-off. You made your low on the 13th, rallied up, was not on great volume. There was some volume there, but the pullback that we've seen over the last couple of days in here has been on really no volume. And as a guy that looks at charts all the time, looking to say, hey, have you made a low or have you not? I like to see volume. I like to see pullbacks on no volume. Now I want to start to see some rallies on volume if we're going to make this truly be a double bottom in here. And we didn't see any volume yesterday. So that puts me in sort of the skeptical camp for right now. I'm still thinking a double bottom is possible, but need to see some follow through on volume to the upside.
Hey, Craig, thanks so much for being here, especially the first trading day of the second quarter. What a great time to have you on. I also wanted to give you a little bit of credit because I think it was like about a month ago that you were on and you mentioned lag 7. And now I hear that all over the place. The first time I heard that was when you were on the show about a month ago. So it's a really catchy way to kind of describe what's been going on in the market. Question for you, what's been working recently has been the lower volatility areas of the market. The utilities look pretty good. I think part of that has to do with interest rates, but insurance names, particularly in the financials, which have been holding up. Defense names have been doing okay as well. Energy has been doing well. You mentioned that once we kind of get things going here in the second quarter, and maybe perhaps that the tariff event, I wanted to get your opinion if this might be a kind of a buy the news event rather than a sell the news event. Do you think it's going to be some of the names that have gotten hit the hardest that are going to come back, in the growth area? Or do you think it's going to be more of your lower volatility, maybe Dow Jones type stocks? What is your opinion on that?
Yeah, so it's a great question, and you hit to the heart of exactly what a lot of portfolio managers have to do because they can't go to cash. I mean, traders, retail investors, they can use cash as an asset allocation tool, and they should. When you look through the market right now, you're absolutely right. I actually did a presentation last week looking at the insurance companies and looking at reinsurance, non-life, life, full line, etc. They're all doing great year to date. They were actually some of the best relative performing parts of what I see happening in the market. But those have been the hiding spots. So what I'm going to be looking for in coming days is, do these stocks start to roll over on the charts? And if they do start to roll over, it's going to be the indication to me that sort of the bears are coming out of hibernation, shall we say, and they're going to go start to put money to work in other areas where there's bigger returns to be had. But yes, it's definitely been a hiding spot. And I'm not going to be chasing these sort of names if we're going to start to get moving past that April 2nd date for tariffs. It's money's going to come out of these insurance companies, and it's going to probably come into tech. I just don't think it's going to go into the Mag 7. I think it's going to go into more mid, small cap-ish type stocks is where I think that money's going to go, because the trends in the Mag 7 are still not very good. Whether it's Apple, whether it's Microsoft, whether it's some of those kind of names, these particular charts, I mean, it's a hard ask to go buy something that's losing on relative performance right now. It's a hard ask to buy NVIDIA. I mean, look at this chart. This is sort of a rolling over, almost a topping pattern in here that frightens a lot of people. But you got an uptrend break and you're below your 50, 200 day, and your 50s just crossed below your 200 day. So I don't think you're coming for semiconductors. You're probably coming for software. Some of my favorite things would be like Twilio on this pullback in here will probably be one that will probably be worth buying out here on any sort of pullback. Maybe even a Snow could be another one to buy on a pullback to support. If you're looking for something in financials, probably something like Morgan Stanley would be sort of an interesting pullback. I'm always a fan of crypto. The pullback in crypto feels overdone to me too. And so some of these names like Robinhood, Coinbase, probably better names to go and buy.
Craig, the leadership that we saw yesterday is not exactly the leadership that you want to see, right? Utilities, XLP. I mean, that to me, that still looks like the market's looking at the safety trade, the value trade, worrying about the overall direction. I know that portends to the Mag 7 and stuff, but Berkshire Hathaway, I mean, are these going to see the stocks you want to see leading the way here?
Those are not the stocks. And again, that tells you that on the bounce that we saw yesterday, again, was not on very good volume and was sort of being led by defensive type stuff. Just sort of suggests to us that, again, markets don't think that the clearing event has happened yet. Maybe that is tomorrow. That is going to be the clearing event. People kind of figure out, like, we're super worried about a particular event in time coming up. And we get through that period of time without having some sort of major disruption. And at that point in time, maybe those stocks end up getting sold and you start coming back in. That's exactly what I'm going to be looking for, Joel, as we go into, tomorrow at that, I think 3:00 Eastern event at the Rose Garden with these tariffs and what new comes out of it. We might even find information before that event, by the way, leaking out into the news ahead of time. But yes, the market is playing defense.
We talked to you last week, and you were cautious on the move overseas, the move in China. A lot of talk has been U.S. is not the place to be. You got to put your money overseas. You got to go to Germany. You got Japan, a little bit of a pullback yesterday. You still digging the shovel in the ground here and chanting USA, or are you urging your clients to look other places?
So I don't think at this point in time that the world order has changed. And the world order in my mind is that the US innovates, China replicates, and Europe regulates. And even if you put tariffs across the board on this, I don't think that changes the world at this point in time. So I still would rather have my money here in the US. I am not convinced when I go back and I start looking at the analysis that we've done for international markets, looking at the S&P 500 versus the U.S. The MSCI All World Country Index x the U.S. I'm not seeing that like these are the odds that I want to go play. Like post the great financial crisis, you've rarely had outperformance. And the only time that you've really seen international outperform the US, when there's some sort of crazy tech bubble unwind or the Plaza Accord or trade deficit concerns or those kind of things. But there were really only two major periods since 1971 when you've had international outperform the US. I just don't think that we're getting a change of the order here or a changing of the guard, if you want to put it that way. I still think it's going to be the US.
You're afraid of heights in the gold market?
Yeah, I don't really want to go chase gold in here from my perspective. I mean, there's no doubt it's a defensive trade. I think part of what's sort of pushing gold at this point in time is just, you got a lot of policy changes. And if you're holding US dollars, who knows? Things could change in Washington, and all of a sudden you're at a point in time where, hey, they're going to lock up your reserves unless you abide by their tariffs, or they're going to take money out of your reserves if you don't pay your tariffs. There's so many variables that come into play. I think a lot of countries around the world are saying, hey, I think I'll hold my reserves in gold versus holding them anywhere else. And then, Joe, when you usually get gold prices at these sort of levels, it starts coming out of the woodwork is what ultimately ends up happening. People bring in jewelry. They bring in an old filling that they've got, send it in, get $50-$60. They bring all sorts of stuff in. So that usually sort of holds down the price of gold ultimately. So while the trend is up, the advance is so steep that I'm not sure that I really want to step up at this point in time with new positions.
How about in the energy space? Are you looking at anything that's got like a little bit more of like, and I know energy is a generally a value type group, but anything catching your eye in there that could be a little bit more exciting out of that group, as you mentioned that you do like small caps here?
Yeah, so energy doesn't have to be totally a defensive place, but again, with the drill baby drill, I can see here from our total return relative strength work, I don't need to chase any of the oil and gas independents, primary, secondary, emerging, or even the microcap plays there. I do see strength when it comes to some of these pipelines, some of these gas gathering areas of the market. They definitely look stronger. So from my perspective, what we've been calling out in here is on the pipeline side of the world, not necessarily small mid cap per se, but great looking chart to set up in an in bridge and a decent dividend yield to boot with it too. I've also been inside of this group. Let me zoom into it. Inside of this group, I've even got TRP. I got Kinder Morgan. I got a bunch of these names that fit into this, but great looking group on the pipelines, great looking group for Enbridge. And again, if the economy is going to pick up, volume through these pipelines should pick up, which should be a great sign. And you're getting very close on an Enbridge to breaking out of almost a 10-year high on that particular chart when you look at this lower left-hand panel here. So again, these are some of the things that I'm looking at that are probably a little bit more differentiated. But if I'm going to play in energy, I'm playing pipelines. I'm playing nat gas. I'm playing those kind of things, guys.
Craig, I love your optimism, and I love your analysis of things that are going on. But one thing I want you to address is the consumer, right?
Sure.
You need the consumer to consume.
Have you talked to my kid lately? I mean, I got my credit card bill over the weekend. He's clearly consuming at this point in time.
What is he consuming? Anything catchy? Anything trendy?
Spending a little bit of time at Costco, picking up a bunch of stuff. You look at the bill, all of a sudden you're like, wow, how'd your day go? But it's okay. Happy to have him around. But at the end of the day, when I look inside a consumer space, I'll just tell you that I'm looking at a very sort of bifurcated consumer in here, right? The low end is getting squeezed. High end is still doing well. The Walmarts, the Costco, still constructive looking charts. And let me show you just overall sort of the advanced decline lines. Certainly can't really like that. Look at the relative strength in here. Definitely weaker on the unweighted side for us. Let me pull up a couple other pieces in here that I think are interesting. Home builders, not quite ready yet. Look like they need to probably pull back a little bit further as I look at this chart and I look at some of the individual companies. But longer term, I do think that the current administration is going to get rates down. And as rates start working their way down, then I think we're going to start to see these residential builders pick up. But more specifically, take a look at this chart. Designer label apparel, still trending and doing okay. Weakened a little bit, but still there. And when you look at the extreme value side of it, we've already broken these big uptrends in here. No doubt about it that the lower end consumer is hurting. So I can't get on board with Dollar Tree. I can't get on board with, Five Below or those kind of companies. But other things in the consumer space that look better, Walmart, BJ's, Costco, those are the place to be if you're going to be trading things.
Did he snag any of the lobster tails at Costco? I love those lobster tails. You don't know what was on the bill. But, I mean, you mentioned a lot of areas of the consumer, but you did it. What about the travel? What about, and I know you told us people were still going to go on during COVID. We got all the tapes. You can go back and listen to it. People are still going to go on cruises. People are still going to fly. I mean, those are some ugly looking charts, Craig, and that's the consumer. How can you be so optimistic?
Well, what's on the tape for him is not lobster tails. He happens to buy the fillets at Costco. If you haven't tried
that's
those,
good. Well, then surf and turf.
There you go. But when you come back, Joel, and you look at the cruise lines, right? I mean, if you look at something like Carnival, you're just back to the long-term uptrend support line. We haven't really broke that, okay? Where you're looking at the consumer in here. I mean, some of these pet stores, I mean, they're making a head and shoulders top in here in a big way. So the COVID pet trend seems to be kind of waning, and people aren't coming back to some of those things. So there's parts of consumer that are there. We can talk about footwear kind of breaking down. We talked about the home improvement, probably need to correct further. Your Lazy Boy and these other kind of names out here, your trend is still up at this point in time. And again, recreational vehicles look weak. Residential builders need to pull back. Your vehicles, auto parts, it is definitely a challenging space. But Joel, when you put this all together, the consumer is pulling back its horns and pulling back its spending, which is ultimately going to be good for the inflation trends and the other things that are still a bit of a problem out here at this point in time. So if we're going to see these consumers come in, we're probably getting closer to ultimately seeing the Fed probably coming in and providing a little bit of support for this market, which would be good for the equity business across the board.
I don't know, Craig. Craig, you're about as tough as my wife. I can't ever win an argument with you. But we're not arguing. Craig,
I'm happy to arm wrestle you at some point in time too.
Oh, really? Really?
We could do that on air. I mean, it could be
I wrestle.
Could be a good event.
I would definitely go a 50 freestyle against you.
I'll start training now. All right.
Okay. Craig Johnson, you all know him, managing director, head of technical research over there at Piper Sandler. Just an excellent fundamental technical view on the market, and we'll give you a little break, but I appreciate you coming on our airwaves with detailed explanations. And people were asking about those charts, Craig, and some of that information. And I know you put a lot of work in that to your clients. Is there any part of those that you could share with our listening audience, or do they need an account at Piper Sandler?
Yeah, we can do that. I mean, just send me an email at craig.johnson@psc.com. And, we do have some friends and family lists and stuff that we can shoot stuff out to.
Okay. All right, Craig. Thank you very much for joining us here on
Have a
Thank
good
you,
day,
Craig.
Craig.
Okay. Evil. No. Dennis, if you haven't heard, is he's just texted me. He's still trying. He has no power. He is trying he wants to trade off his phone, but it really doesn't have enough juice to do it. So we're hoping he can be back tomorrow. Christian, I know we kept you a little overtime here.
Yep. Guys, have
Would you
a
like
great day.
yep nope, no closing thoughts. That's it for Christian. Breadster, how you doing
Howdy.
there?
I'm good. I just was working on the pre-market prep recap in the background. I don't want to get anyone excited. Maybe I shouldn't say this, but I did just see Dennis's face backstage. He tuned in.
Tried.
He tried.
Okay.
Did he?
Yep.
Was he? Maybe he wasn't happy. It seemed okay, but I guess it was just a little triple D tease.
Yeah, actually, I got multiple messages, and I will keep this PG.
Oh, no.
Try to use my phone as a hotspot. And
Poor guy.
Yeah, I mean, he's just. I told him he should. He said, "What is it, Canadian Electric Power or whatever?" I mean, he should sue them
Yeah.
and for what's going on here. But basically,
For like a restitution.
yeah, he downloaded StreamYard, but his cell phone can't run it. I don't think I've ever tried to use
The StreamYard on your phone.
Yeah, but
I mean, it works all right. It works all right.
But Canadian, he told me it, and I don't know if he's correct. That the area that is out, he says, is almost as big as the state of Michigan. Have you looked at the power outage map here?
It's crazy. It's crazy. And like Joel, I forget if we said this yesterday, but yeah, like even northern Michigan here for us got like super hit. You want
Yeah.
Let's see. Here we go. This is the outage map.
Yeah.
That's crazy. It's wow. I mean, is that all of Ontario? That's got to be all of Ontario, right?
Yeah. He said with 282,000 and 362, and he makes up part of that.
You know, the Mother Nature sometimes makes you work for spring, Joel. Just the last little flash of winter, hopefully, and it's one of the worst ever.
Guess I should be in British Columbia. 5,429,020 are out here. Yeah, I think he has. I think he does have a Generac. Should we do some rapid fire ticker time here? I know we kept Craig on for an extended period here.
Craig was good. Craig was good, by the way.
Yeah, he's good, man.
Really good.
He's good. I keep throwing those questions at him. Let's see. Greg says, I'm across the bay from Triple D. That big on the outage. So I guess you should have been on the other side. So as the S&Ps are creeping back here, do we have any tickers? Do you guys want to look up before we continue our programming over on the Stock Trader Network? Hey, Alex, how you doing? We haven't seen you a while. Haven't seen you over on the Stock Trader Network either. Disney, the House of Mouse. A lot of disappointment here over Snow White. I don't think I'm going to see it. Relative strength basis, well, it cut the low out from the former low of the moon. We all know that was March 13th. That low was 95.92, 93. You got to 95.70. You closed $3 above it. Hey, you got a reference point here. If you want to go long this stock, let's just build the base. Let's just calm down. Let's just calm down and not just blast out of here. So that's my take on Disney. You have an identifiable out, and if it takes out that level, Alex, I know you're an aggressive trader. You can try it on the short side. What's next, Brent?
I would say do two more real quick. SMCI, and Gerald was asking about Tesla earlier. I think I kind of gave him a couple like news hints, but I think he might have been asking about the chart a little bit.
SMCL.
SMCI.
SMCI. Oh, SMCI.
You know that one. You know that one. Maybe they should change their ticker to BDO.
Yeah,
that was a bad joke.
It's showing some kind of life here. The velocity of it going down changed yesterday with a small update. Volume still kind of steady. You had a 1, 2, 3, 4, 5, 6-day losing streak, but you did close well above the open. Trading here and there. I would like, this is going to be a good day for SMCI, and I haven't done any levels off it, but this would be the one you want to see it just hold the bid unchanged, just up 20 cents, or if it goes a little bit red. If it started like digging in like to the 33 handle, 33.70, 33.75, I wouldn't love it as much. 34.57, that does not have a lot of significance to me. That's only one pesky high there. So after that, things open up on the upside. Your next daily high is 36.09 for SMCI.
How about Tesla, Joel?
I'll do Tesla.
We got a few more that came in. If you do want to keep going, if you want to just move it over to
I'll do Tesla and 2 more.
Okay, cool.
We got the news, the China delivery things. I think I heard people are nervous about the deliveries. The only thing I think, if you had Tesla for a scalp, then you should have got up at 4 a.m. and you should have been out there at 270. That was way above. That was above yesterday's high. So theoretically, if you want to get long or looking at a gap fill, that's 260.56. But if you could get rocking and rolling to the upside, first target would be that pre-market high just over 270. I don't know. Ahead of the delivery numbers tomorrow, I don't know if it has the gas to get to that 2-day high at 276.10. Okay, what are the last two? You said do 2 more after this, Brent. Did Brent freeze? Brent is freezing a little bit. He's frozen.
Yeah, I was too. Yeah. Am I coming back now?
Yeah, you did. Okay.
Am I back?
I'll just take do we want Google? I like the Google without
Google.
I'll do that one.
Okay. Whatever you like.
Undercut the low of the move yesterday, still did trading down 23 cents. Gotta get green. I mean, you gotta get green, and you gotta stay above that low from yesterday. If you're taking a poke and just saying, hey, the low, you got an area to lean on for the low of the move here, which is not too far away at 152.21. Maybe get a couple days of consolidation. Easy target on the upside, 157.13 if the spoos get rock and rolling into the north. And then things whoop way up to your 2-day high of 163.81.
One more, Joel. Dealer's choice: Hood or Ford? Robin Hood or Ford?
I'll do both because Ford's easy.
What a guy!
Ford's easy. I don't understand why these stocks are not going down more. I mean, I know they had the big haircut. I mean, GM is still hanging in here at 46. Major support. Ford, big update yesterday. A lot of optimism. I don't know why. I suppose what's coming with the tariffs. Big seller at the 1035, 1040 area for Ford, and then a lot depends on the announcements, and then. How's the Hood doing? Hood gave back half of the move, more than half, starting to build some support. This stock moves pretty good with the market, trading up 31 cents. Boom. Can we get, yesterday's high right there, right now. So if the bulls are perky and Hood, they'll get a 42 bid out there. So that's it for today, folks. We're going to have a new analyst on tomorrow from Wedbush. His name is Young Young Zhang, and he's going to cover the volatile healthcare sector. For you guys that want more content, more information on these markets, hop over to the Stock Trader Network, and we'll take care of you. Back with you guys all tomorrow morning.